Good morning, this is Robert Kaars Sijpesteijn bringing you this morning's market update. Starting in the US, Yellen confirmed that no increase in rates would take place, which was widely anticipated, however gave no indication of when the next hike may occur. In a statement, the Fed suggested it had concerns about the gyrations around the world, but it attempted to leave its policy options open, even as traders bet the policymakers would leave rates unchanged until the second half of the year. The Fed carefully towed the line between dovish and hawkish in an attempt to reassure the markets that rate increases will be gradual and data dependent, without sending an overly dovish message that could be interpreted as worrisome for markets, said David Kelly, chief strategist at JP Morgan's asset management arm. Looking at the indexes, the US lost ground yesterday with the US 500 dropping 15 points to close on 1,879.73. The US Tech 100 shed 61 points to close on 4,146.43, and the Wall Street dropped 187 points, closing on 15,899. While Apple gave a conservative report on Tuesday, it was Samsung's turn to report yesterday, further adding to the gloom hanging over the world's technology sector, with a warning that its profit is likely to fall this year. As its components business faces waning demand from global manufacturers, for most of last year, Samsung's semiconductors and display panel divisions helped offset the impact of sliding smartphone revenues, with strong sales and components to other device manufacturers that were still enjoying healthy growth. But operating profit at these units fell 36% in the fourth quarter from the previous 3 months, Samsung said on Thursday, amid a sharp fall in prices of memory chips and display panels as the outlook darkened for global electronic demand. Samsung revealed that full-year net profit fell by 19% to $15.8 billion, hit by investment write-downs and a sharp rise in tax payments. This year, the company would find it challenging to avoid a further decline given the broad slowdown in the sector, head of investor relations Robert Yee told analysts. While both tech giants currently struggle, Facebook's mobile advertising surged in the final months of last year, spurring an unexpected reversal in slowing revenue growth as the world's biggest social network and bringing a sharp bounce in its share price. A 13% jump in Facebook shares in aftermarket trading added $35 billion to its stock market value. It came despite signs that the company is gearing up for a period of heavy spending as it builds more data centers to support its growing global network and stakes out ambitious new markets in areas ranging from virtual reality to artificial intelligence. Revenues in the final quarter of 2015 jumped by 52% to $5.84 billion. Facebook reported late on Wednesday that was far ahead of the $5.37 billion most analysts had expected, and reversed a steady slowdown that had seen revenue growth decelerate to around 40% in recent quarters. Facebook's advertising revenue grew by an even faster 57% and would have been up 66% had it not been for the strengthening US dollar. Looking into commodities, gold continued its upward climb, adding $5.30 to its value. The precious metal closed at $1,125. Brent crude also had a positive day, moving away from the $30 mark. Crude added $2.93, closing at $33.04 a barrel. In Europe, the Germany 30 declined slightly, losing 86 points to close on 9,739.5, while the UK 100 gained 10 points, closing on 5,917.7. The German conglomerate Deutsche Bank reported its first annual loss since 2008. The German leader has posted a full-year loss of 6.8 billion euros, more than the 6.7 billion that had been trailed, with fourth-quarter losses of 2.1 billion euros. Litigation charges played a large factor in this, with 1.2 billion euros chalked up in the fourth quarter alone. Though this figure could still change, total for the year stood at 5.2 billion euros compared with 2 billion euros in 2014. Revenues in the fourth quarter were 6.6 billion euros, down 15% year-on-year, primarily as a result of a decline in Deutsche Bank's corporate banking and securities division, as well as mark-to-market losses in its non-core operating unit. Co-Chief Executive John Crean said in 2015 we made considerable progress on the implementation of our strategy. The much-needed decisions we took in the second half of the year contributed to a net loss for the fourth quarter and full year. He concluded, "We know that periods of restructuring can be challenging. However, I'm confident that by continuing to implement our strategy in a disciplined manner, we can and will transform Deutsche Bank into a stronger, more efficient and better run institution." In other corporate news, Deputy Chief Executive of Dixons Carphone Andrew Harrison is joining Ocado's board as non-executive director. Anglo American announced it had increased its copper production over the year by 5%, and SSE said it will cut prices by 5.3% from 29th of March. It is the second supplier to do so after E.ON. Today's economic data in focus at 9:30 in the UK, GDP data is released. At 10 a.m. in Europe, consumer confidence is released. At 11 a.m. in the UK, CBI trade survey is released, and at 1:30 in the US, jobless claims will be released. That's all for this morning's market update. Thank you and goodbye.